When it comes to trading, the question that typically arises revolves around using the right indicator. Traders are often inclined to look for the next life-changing model that yields the best return and offers the best exit strategy. One of the most used and followed indicators on TradingView is the hash ribbons released by Capriol Investments, a large digital asset hedge fund established in 2019. Without getting too deep into the technicals behind this model, the Bitcoin hash ribbon model tries to identify periods when Bitcoin miners are in distress and may be capitulating, hence giving investors a sign that it's a great time to enter the market. The founders claim that this indicator is one of its kind, as they emphasize the idea that there is no competition to it since it has yielded average returns to cycle peaks of over 5,000% with a max drawdown of 15%. In today's video, I decided to collect the data myself for this indicator with both Bitcoin and Ethereum to truly analyze how good it is. We will be taking a look at how much money you would have made in the next 30 days, 182 days, and 1 year after following every buy signal. Now, our strategy would be to remove the noise from this indicator by removing the capitulation dot, the minor capitulation, recovered and recovering, and we would only keep the blue buy dot. Now, what's left to do is pretty simple. You would only need to buy when the buy signal appears on the screen. Throughout BTC's entire history, we've got 18 different signals, meaning an average of 1.5 signal per year. For Ethereum, on the other hand, we've only got 11 signals throughout its history, which might not seem like a lot, but it is, since Ether has only been around for 8 years. What we'll be doing is taking a look at these two dashboards, starting first with Bitcoin's hash ribbon ROI. The table shows the 30 days ROI, the 6 months return, and also the yearly ROI following your Bitcoin buys. On the left side, we can see the dates of every signal as well as the average return for every period and the gain ratio, which represents the odds that this indicator would make you money in that period. The average 30 days ROI with Bitcoin with the hash ribbon stood at 17.54%. Now, we can clearly see some negative 30 days returns like back in January of 2019 or last year, but overall, the numbers aren't that bad. The gain ratio is also at 72%, which means that the odds of you having a positive return 30 days after following this indicator are much better than average. 7 out of 10 times following the hash ribbon, you would have ended up with a positive return after about a month. Looking at the 6-month ROI, the story shifts completely as we've only experienced a single negative return of 2.7%. In reality, all these returns were impressive, some of them even in the 3 digits, which happened twice in 2020, for example, and even the negative return wasn't that bad. I mean, worst case scenario, you would have lost a 2.7%, which is nothing. The gain ratio stands at 94.11%, which is quite impressive. And so following this indicator and waiting for 6 months before selling has proven to be fruitful. The yearly ROI is even more impressive with an average return of 5.71x, and the gain ratio is unbelievably good too. Now, there are 2 things I want you to keep in mind here, and I believe they are very important. The first is that this 471% is quite inflated because we have had crazy returns of 4 digits in 2011 and 2013. I mean, the 1,499 and this 2,980% returns are what pushed the average this high. And so if we remove those 2 times from our calculation, the average ROI will decrease a lot. The other important info I want to share is the 2021 negative ROI. Remember what I said at the start. The founders claim that the drawdown is about 15% at worst, but that claim is inaccurate because following the August 2021 signal would have lost you 45.91% of your money in just 1 year. Some might not see this as a problem and they will only focus on the average and gain ratio, but it is. I mean, there is no guarantee that everyone starts following this model since its creation. If you started using it in 2021, for instance, you would have got screwed. And this is also why you must have an exit strategy if the loss gets too big. For Bitcoin, I'd say that this indicator has been good all around, but remember that most of the good numbers we've recorded were taken before the indicator was even developed. Since it came, although it has also proven to be helpful, it still didn't perform as well as the developers claimed. This isn't to say that you should not use it, but rather me telling you what's true and what's not, because nowadays everyone makes claims without backing them. I just want this video to be as honest as it gets so you can make up your own mind about how good this model is. Okay, so let's move to a different project now. I completely understand that this indicator was developed for Bitcoin, but I also want to test it with Ethereum and see if it's any good. It might not make a lot of sense to use an indicator that is based on the correlation of the BTC hash or the BTC net hash rate, but let's give it a try. I mean, who knows, maybe it's good. So we have a similar looking dashboard here too, but with fewer data points. And in my opinion, the results are indeed good for the 6-month return and 30 days ROI. The average 30-day return shows some red in it. There would have been times when this indicator would have sent you down and made you lose money, but on average, you would have made 13.15% with a gain ratio of 72%. The average might seem slim in comparison to the one BTC showed, but remember, for ETH, the signals have came since 2019, while for BTC, we've been recording data since 2011. In 2011, BTC's market cap was way too small, and so the returns were much bigger on some occasions. The 6-month ROI with this indicator has also proven to be good here. I mean, for Bitcoin, we were mainly impressed with the 6-month ROI. And the same goes for ETH. We have a gain ratio of 90%, meaning that 9 out of 10 times this indicator would have been on point. It's also true that the last 2 times the returns didn't live up to expectations. I mean, 5% isn't massive, but keep in mind that we were in bear markets, and so the goal there is mainly preserving the capital and what you've made in the previous bullish phases. 5% it's still better than losing most of your net worth just because you were unprepared. On the other hand, the yearly ROI is a bit underwhelming, I believe, because the last 2 signals would have ended up quite brutally. Again, the average looks good, but looking at the 2021 numbers, we can see that they are horrible. Imagine losing a third or half of your investments following what supposedly is the best indicator out there. And so I wouldn't really suggest following this model with ETH on the yearly. Overall, I believe that this indicator is decent. Not as good as the firm backing it claims, but it's a good model. The best returns have been 6 months after following every buy signal, and the gain ratio has always been above 50%. I don't think it's the best indicator to ever exist. I've tested many other models like the stochastic RSI, the KDJ, the Phoenix ascending indicator, the Heikin-Ashi candles. Some were even better than this one. This isn't to take credit away from this model though. I do believe that the hash ribbon will give you an edge over the rest if you want to trade macro. However, I think you should add an exit strategy to it for every time span in case the losses get too heavy and they exceed a certain amount. So that was about it, everyone. I think you can make your own analysis just by looking at the returns. Whether you want to use this model or you want to send it to the garbage, that's up to you. I think it's decent and it's really helpful, especially if you find a way in minimizing the risk when crashes occur. Thanks for sticking by till the end. Like the video if you enjoyed it, subscribe of course, share the video with someone who might be looking for a good indicator, and I'll see you in another video. Bye bye.